The crypto space got off to an impressive start in 2020, but couldn't hang on to that momentum with demand slowing down in February before falling apart in March. Bitcoin's high in March, about $9,200. Bitcoin's low, just under $4,000. Quite a swing, and yet the intense setback was finally met with impressive demand, much like we've seen in the space time and again since inception. At the close of Q1 2020, Bitcoin isn't all that far off from where we closed out 2019 and ultimately still looks to be in good position to think about making its next big move to the top side. As we reflect on the first quarter of 2020, the most important takeaway in our view is the fact that the round of setbacks seen in March was a round of setbacks that had the emerging asset reacting to developments in the global economy. Back in 2018, when cryptocurrencies were tanking, the decline was specific to the crypto sphere. But in 2020, we're seeing a new kind of maturity in the asset class, with price responding to global pressures. The fact that we got a taste of this in a period of turmoil is all the more encouraging, as it acts as a kind of stress test, proving the legitimacy of the potential of what could be to come for crypto. The initial decline in March coincided with the decline in stocks and made sense in our view, given Bitcoin's correlation with risk as a still maturing asset and emerging technology. But when stocks continued to extend their March decline to multi-month lows, Bitcoin held up and found demand. We believe this demand came from medium and longer term players who realize Bitcoin's potential as a store of value asset. As we look ahead to the remainder of 2020, we still believe Bitcoin could be exposed as a risk-correlated emerging technology to periods of price weakness, given ongoing vulnerability in the global economy to coronavirus fallout and to future negative shocks at a time when central bank and government stimulus efforts have been exhausted. But at the same time, we expect the potential in the crypto space and the potential of Bitcoin maturing into a store of value asset to continue to attract meaningful demand from medium and longer term players looking to increase exposure. Technically speaking, we'd expect Bitcoin to hold up above the 2018 low, with a higher low sought out ahead of the next major upside extension, eventually back towards a retest and break of the record high just ahead of 20,000 from late 2017. But in order for Bitcoin to show signs of getting going again, it will need to clear initial resistance around 10,500, a level that capped gains in the fall of 2019 and again in the first quarter of 2020. Until then, more choppy consolidation is to be expected. As far as blockchain activity goes, the intense price decline in March resulted in a sizable drop in mining difficulty, the second largest drop on record, as unprofitable miners were forced to shut down their rigs and take to the sidelines. But this drop in mining difficulty is how the system is designed to operate and helps to ensure block times stay where they need to be. And while we did see a drop in mining difficulty, we also saw a pickup in velocity, quite often a solid indicator for the overall health of the asset. Looking at volume, we saw a big pickup in March as the global turmoil in markets played out before volumes came back down into the end of the first quarter. And yet volumes were remaining higher into the end of March than where they were around peak levels in January and February, another positive sign. Into the end of Q1, average ranges for Bitcoin were $630 on a daily basis, $1,400 on a weekly basis, and around $2,800 on a monthly basis. This reflects overall volatility closer to what was seen in 2019, but not nearly as much as what we had seen in late 2017 through the first half of 2018. We've recently seen some backwardation in the Bitcoin market with spot tracking above futures, which reflects the bearish view of the spot price, but also sets up favorable dynamics for investors taking long positions. As far as implied probabilities go into the end of Q1, the options market isn't all that bullish Bitcoin in the second quarter, with only a 16% probability of the price pushing back up above 10,000. This is consistent with our expectation that the market is likely to chop around some more in the months ahead as it continues to be weighed down by broader risk-off pressures in the global economy, given its shorter-term correlation with risk as an emerging technology. At the same time, we continue to expect the price of Bitcoin to be well supported on dips as medium and longer-term players look to take advantage of a discounted price relative to Bitcoin's potential as the store of value asset it may eventually become.